Across the U.S., fall markets are the topic of conversation in auction markets and hometown coffee shops. While some areas are still feeling the impacts of long-term drought, many are looking forward to a better corn harvest this year. USDA is predicting a significant increase in corn production this year at more than 13.8 billion bushels. We've also seen increased hay production in many parts of the country. However, many questions remain about how fall markets will shape up. And that's the subject of this week's Market Watch.
Market Watch.
And joining me now to talk more about expectations for fall feed and cattle markets is CattleFax analyst Todd Calous. Todd, welcome back to the show.
Thanks, Kevin. Great to be here.
You know, last year when we were talking about this, the drought was clearly driving grain prices higher. We've seen some changes relative to moisture across the country. What does that mean in terms of both corn yields and prices as we move into the fall?
Well, you're right, Kevin. The drought has definitely had a significant impact on our grain markets in the past year. I think if you looked a year ago, we were trading more of a $7 to $8 a bushel corn price on the spot futures contract, and today you're $3 lower, trading more of a $4.5 to $5.5 range. So the drought has definitely had a significant impact. I would say, you know, the improved moisture conditions. We've seen a record large corn crop that's been planted. Yields are expected to be significantly larger. The result is a record large corn crop on top of 13.8 billion bushels is expected. If you looked at the yield, I think USDA is projecting the yield to be 155 bushels per acre right now. That's still 10 bushels below the record set a few years ago, which tells me there's still some regions of the country that are dealing with the drought in terms of how that's going to impact their corn crops. But all that said, we really expect corn to kind of stay in this range. We would be surprised if corn traded much below 425 on the spot corn futures. We really see the next 6 to 9 months probably trading in a $4.5 to $5.5 range.
Very good insight. Now, tell us this. Turn your attention to the forage market. Clearly, the moisture around the country has improved. Many hay crops and forage crops across the country. What do you see that doing from a pricing perspective?
Sure, Kevin. Well, I would say, you know, for this summer, the prices for hay and forages, you haven't seen as much relief as maybe you would have thought. I think it's very regional, depending on how much relief you've seen from the drought. I think if you look at the eastern third of our country, they're probably in the best shape in terms of their hay and forage supplies because they've had some of the best moisture. If you look basically Texas to the west, much of those regions have seen improved conditions in terms of moisture, but they're still dealing with a lot of the effects of drought. I think you've got a lot of producers who are trying to replenish those supplies that have been depleted over the last couple of years. And I think you also looking forward, the winter time frame. We don't know for sure what kind of winter we're going to have. I think you've got a lot of producers who are going to want to keep a little more feet around them this winter. I think for those reasons, you're probably going to see hay prices stay a little elevated, at least through the winter time frame.
Yeah, I talked to somebody in Nebraska who said last year he put up 140 round bales, this year 1,400. So yeah, clearly a huge difference.
Absolutely.
One last question for you. As you think about this fall, a lot of people are looking to market calves this fall. What can you tell us about this feeder cattle and calf market as we move into these fall months?
Sure, Kevin. Well, if you look at the calf market first, they've been pretty contra-seasonal. They actually, you know, we've trended higher since May and June, kind of that time frame. I think if you look at a U.S. average for a 550-pound steer today, you're kind of in that low to mid 170s on the price. Seasonally from here, you would expect, you know, the fall calf run to be a little bigger and therefore prices to be a little lower as we go through the fall. I think this year we would expect to see some weakness. That's still probably likely. But at the same time, there's several reasons why we think calf prices are probably going to stay elevated through the end of the year. Primarily because you've got a smaller calf crop. We know that's continued for several years. At the same time, you still have really strong demand for those calves from the stocker segment and the feedlots as well. And on the feeder side, a very similar trend to what we see in the calf market. You know, seasonally, you're in the time frame for when feeder cattle prices typically peak, and we typically would trade a little lower here into the November time frame. You've still got the same reasons for higher prices that you do on the calf side. You still have the strong demand from the stocker guys and the feedlots as well. We wouldn't see the CME feeder index probably trading much above the low 160s in here for prices, and then probably trending a little softer, but at the same time staying elevated compared to what the seasonal would tell us. Those are the main factors we see impacting the calf and feeder markets this year.
Very good. Well, clearly there's still a lot of uncertainty, but certainly a reason for some optimism for the cattle business as well. Thanks for coming today.
Thank you, Kevin.
We always appreciate the insight from our friends at CattleFax. Now, to find out more about current trends or view full episodes and video replays of our show, just visit our website. That's cattlemantocattleman.org.